Hello everybody, welcome to another edition of Dave's Daily Dives. Here we are on April 19th, and I'm going to do what I always do, take a look at the market, the S&P 500, we'll look at the Russell, we'll look at the Euro, maybe even look at gold, depends on how I feel. But at the end of that, I'm going to give you 5 Zacks Rank #1 strong buy stocks that are breaking out to new highs. You got to love the Zacks Rank. That means that earnings estimates have been ticking up in a positive direction. So when you got that fundamental driver coupled with a technical picture that's very bullish, that oftentimes makes for some good trading opportunities. So I've got 5 stocks to talk about today. Don't let me forget. But first, back to the S&P 500. As always, now you can tell a lot from a chart, right? Even a single bar. Now, I don't even have to go into the details of what happened intraday because honestly, at the end of the day, it doesn't matter as much. I know that sounds funny to say, especially as a chart guy, but you know, does the action of this large bar mean more if this happened, you know, at noon it came down and then it stayed there? I mean, overall, in the grand scheme of things, it doesn't mean as much to go intricately into the intraday bar, but you could tell a lot just from this. So what I could tell from this here is that the market tried to get higher, tried to break through the April 17th high. Remember, we had an inside day yesterday, tried to get above it, failed, and then pulled back. Now the good news for the Bulls is that they beat the Celtics last night. Ha ha! No. The good news for the Bulls here is that today we managed to close above yesterday's low, and we're still well above this swing low here that we saw on March 27th. This is that proverbial line in the sand at 23, 22, 25. So that is the bottom of the market right now in the short term. It also happens to coincide with this 23.6% fib retracement we've been talking about from the November lows to the March 1st high, okay? So that's the scenario on the S&P 500. So at the surface, yes, it wasn't the most bullish of days, but was not a reversal or anything. So tomorrow you got to keep a close eye on these levels. First, the April 17th low of 2332, so 2332 and a half, which you got to keep an eye on. And then remember, this is still very important, the March 27th low of 2322 and a quarter on the S&P. So 2 areas that you really want to watch for. We'll see what happens with the market tomorrow, right? But the market did begin to sell off a little bit. We also saw volatility. Now remember, volatility spiked into last weekend, basically the end of last week, right? So Thursday, if we didn't have a trading day on Friday, so heading into the long holiday weekend, we saw a spike of volatility, and then Monday they crushed volatility. Yesterday, volatility sold off a little bit. Today, they started to push volatility down. The VIX got back down to 1346 before the market started to fall apart, and then it pushed back to 1493. So still overall pretty low for volatility in the grand scheme of things. But it is important to note that it is on the move. However, I could argue that, you know, we're still coming down. This is very much a downtrend here for volatility. So something to keep an eye on here is, will volatility spike back up and get through that April 17th sort of short-term high? And again, in the long term, this is nothing, right? The VIX down here under 16, under 15. Even if it gets above 20, historically, that's really not that big of a deal. This is just something that to keep an eye on moving forward, okay? The other thing I want to talk about, of course, is the Russell. And the Russell has been so important for me to look at because it's been in this channel. And we drew these trend lines yesterday to give you this channel. And you'll notice here, a rally up kind of failed at the top of this channel and then retreated into the close. Now the question remains, will it reverse here? If we look at some of our indicators that would tell us of a reversal, typically you see the commodity channel index a little bit higher prior to reversing down, right? So we have this sort of attempt here at the end of March where you see the CCI coming up to 100 before it really reverses down. Kind of another move here. went from oversold up through the zero line prior to spiking down. Now, I know a lot of people are going to say they'd much rather see a fast stochastics here for me to comment on, of course. But I like to use the CCI because it gives me less signals than the stochastic does. And so for me personally, it's just more meaningful when I see commodity channel index go from oversold crossing the zero line. That tells me something. And right now, it has been oversold, making a move. So what I'd like to see, obviously, is a CCI cross above the zero line as this breaks the top end of the trend line across the tops, rather. Then you'd see a nice little rally in the small caps, and things would be smooth sailing. Now, what about the NASDAQ? Because the NASDAQ hasn't shown the same characteristics that the S&P 500 and the Russell has, in that it's just, you had the huge rally from election day, but it really didn't let up for the NASDAQ. So into the end of December rather, that's when you kind of saw the small caps retreat a little bit. Hasn't been the case here with the NASDAQ, and don't think that this is the FANG stocks, right? That's what everybody likes to say. Oh, it's just the FANG stocks. I want you to take a little mental note of what's happened. So a small consolidation, but we're right near the highs though. So a little bit of a consolidation up near the highs here on the NASDAQ. Still, this is the NASDAQ composite, by the way, not the NASDAQ 100. We're at 58.63 and change here today. Another similar story. We're an oversold commodity channel index, or CCI rather, starting to creep back up. If this crosses over that zero line, suddenly we're on a new buy signal. Similarly to here, oversold, crosses zero, off to the races, right? Here, oversold, crosses zero, off to the races. So this occurs with some frequency here. Maybe this pattern is going to play out one more time. But like I said, not just the FANG stock. So let's take a look at Facebook really quickly just so we can see and compare. Facebook, a little bit of a consolidation here, right? But in December, in the early stages of that rally, Facebook really didn't do it, right? Amazon's the other one that people love to mention. Well, again, we're talking FANG, right? So we might as well bang through all the FANGs. Again, consolidation throughout November and December, and then broke higher just recently. So that doesn't really explain it. Netflix. Now, they had... I was bearish heading into Netflix earnings, and despite their subscriber growth, it still didn't make that 100 million. And now it's starting to tick back down here. Got under 140 today, but this has been in a consolidation for an extended period of time. And then, of course, the Googs. I'll do GOOGL here. You can do, obviously, just GOOG. Same story, where this is chopped sort of back and forth, been in consolidation for much longer than the NASDAQ has been, so can't just blame it on the FANGs, all right? Okay, so now let's take a look at 5 Zacks Rank #1 stocks that are breaking out to the upside. The first is Boyd Gaming. So these guys headquartered in Vegas, and they basically own casinos throughout, Nevada, Illinois, Indiana, Iowa, Kansas, Louisiana, Mississippi, and New Jersey. So the story here has been, some choppiness throughout last year, or the end of last year into this year. Found a nice little floor in the 19s, found more bids here at 1950, and has since broken out of the top side resistance here. Now it's pushing higher. Volume's basically been okay, right? Nothing spectacular on the volume front. But that's really good to see this pullback here, this much higher highs that have crept in here on multiple occasions. So that's good to see this sort of shelf building upwards. Nice little accumulation there on Boyd Gaming. If you're looking to get long, you can put your stops just below the sort of previous resistance level, 2150s. So nice little risk versus reward. Plus you got the swing low there, so even 21s would be safe. A decent way that you can play Boyd Gaming, ticker BYD. Another Zacks Rank #1 strong buy stock for you to look at is Commercial Vehicle Group, ticker CVGI. So these guys do interior systems, vision, safety solutions, and other cab-related products for the global commercial vehicle market. Obviously, I just read that. But you can take a look here at shares of CVGI. We've been on a little bit of a run. One thing I want to point out here, this is my volume at price indicator. It's a horizontal histogram of volume. I like to use this because it shows me where lots of shares have traded, where there's been historical support or resistance. This helps to confirm it. Of course, maybe I didn't even need that to tell me that bunch of buying down here at 535, down at the end of March. Now it's been rallying higher, looking for resistance to the upside. So this one's going to be a little bit more of a roll of a dice. You do have a recent uptick in volume here, but a big day the other day, pushing higher. On this one, maybe under 7s, even under 650s is probably a better area of for a stop loss, or if you just want to wait for shares to come down there prior to trying to buy it. This is a breakout, of course. So one way to play a breakout is you can buy the breakout immediately and have kind of a tighter stop on it. And that way you have a good little risk versus reward scenario set up for yourself. That was Commercial Vehicle Group, ticker CVGI. Now we got a much more, well, a dirtier business, right? These guys, Casella Waste Management. I'll give you two guesses what they do. You're right. In the waste management business, and business has been good. EPS estimates have been ticking up. That's why they are Zacks Rank #1, a strong buy. And you can see the nice little move that we've seen with buyers stepping in here in the high 8s. You can see that big band of volume there too. Also another round of buyers coming in here at 12.5. And the stock has been going higher too, starting to consolidate here just a little bit. But I think this is something that you can peck at and not worry about too much, given that bullish undertone in the earnings estimates. That again was Casella Waste Systems, ticker CWST. The next on my list here is Dycom. So they do specialty contracting services in the U.S. So engineering, construction, and installation services for telecom providers, things like that, and electric utilities and all the sorts. So infrastructure play big time. You see a big jump following earnings. Came back, found support at the 86.90s, and then have been rocketing higher. Whenever I see a stock that busts on through 100, I expect a retest of 100. So with the commodity channel index up over 262, if you're not already in it, I would just wait a little bit, get a little bit better risk versus reward scenario for yourself. If you're holding it, just keep on holding it. It looks okay. And again, big uptick in volume here, but the CCI over 200, I like to wait for that to come down and test the zero line before I load it up on Dycom, ticker DY. Then we've got one we can all toast, Constellation Brands. These are the beverage providers famous for Corona, and you can see a lot of choppy consolidation here from November on into February, and then things started to take off. You got a big beat, which provided a big boost to the stock. Now sort of this 168 level, nice little floor for it, right? These sort of wicks up here to 175 that have been rejected are cause for a little bit of concern for me, because it happened twice on successive days. And if you take a look here, October 5th, 2016, also an area that was rejected there. So they've tried to probe higher, failed on a couple occasions. I think maybe next time they can go ahead and push on through. I'd be long here, put stops just under 167, or just under 168 rather. That'd be a nice safe little, just risk a few bucks to the downside, and you got a lot of upside potential. So that was Constellation Brands, ticker STZ. So again, it's Dave Bartosiak here with Zacks.com, and you can always hit me up on Twitter. That's at Bartosiastics, BARTOSIASTICS. I know that's a mouthful, folks, but thank you so much for hanging out with me today on Dave's Daily Dive, and I'll see you all mañana.